and welcome back. My name's Laura and I'm a final year medical student currently studying in the UK. This video is all about student finance, what it is and how it works. It can be quite tricky to understand, so I hope this video can break it down and make it make a little bit more sense. So first of all, what is student finance? Student finance is a government-run organisation that basically helps students pay for their university fees. This is done through the government of the UK and is designed to help students pay for their university fees without it being an upfront cost. Each student in the UK can pay anything up to £9,250 to go to university, and this is too much money to be asking students to pay outright. So the government set up a scheme that allows students to apply for funding, and this will be then repaid as time goes on after they finish their university degree. But I'll break this down into more details as this video goes on. So in each country in the United Kingdom, there will be different organisations that run the student finance company. So it's really important to apply to the right student finance organisation. There's one for Scotland, England, Wales and Northern Ireland. So make sure, depending on where you're going to study and where you are from, you pick the right organisation to apply under. So there are two different types of student loans available. One is the tuition fee loan and the other is a maintenance fee loan. Both of these are loans and will have to be paid back, but one will cover the costs of your university degree, so your tuition fees being anything that you're going to study from first to fourth year, and then your maintenance loan is one that you can take out additionally if you want to, and this will cover things that are extra. They aren't to do with the university, but it might be things like accommodation and maybe your living and transport. So the tuition fee loan is available to anyone that is studying in the UK up until year 4 of university. It's available and will be paid directly to the university. You won't have to handle the money, and in fact you'll never actually see this money. It'll be transferred straight to the university without going through any bank accounts belonging to you. This is something that's really important to apply to within the funding timeline, as your university will request this money at certain points of the year. So make sure to pay attention to the rest of this video where I'll talk about when the student finance opens and closes. Students that take out this tuition fee loan will get up to £9,250. This is to cover your year's course at university, and depending on where you go to university, for example if you go to a Northern Irish university, you actually won't take out as much as £9,250, it might be closer to £5,000. The maintenance loan, on the other hand, is not available to everyone at the same rate. So for people that require a little bit more of a helping hand to fund university, they will be able to apply for a larger maintenance loan. This means that it will still be paid back after they finish university, but it allows them a little bit more flexibility whilst they're in university to pay for things such as their rent, food, and maybe books and extra activities that they might do throughout university. Unlike the tuition fee loan, the maintenance loan is paid directly into a bank account of your choice. This is paid in at 3 different parts of the year in 3 separate installments. It's really important that you choose a bank account that you have access to and will use frequently, as this money will be transferred in there and it's very hard to get it transferred to another account if you don't set it up properly the first time round. There are 3 main factors that your maintenance loan allowance is based off. The first is your household income. The second is whether you're actually living away from home or if you're staying at home. And then if you are choosing to study or have got a place to study at university in London, you'll be eligible for more of a maintenance loan to cover the cost of living in London. So a quick example is that if your income of your household is less than £25,000 for the year, you'll be eligible for the maximum maintenance loan available. It does vary year on year and it's important to look up the current year's rates, but it can be really helpful for people that do need the extra support. You can find out how much you're eligible for by going onto the Student Finance website and entering some of the details that they've got questions about. I'll put the student finance calculator in the comment section down below, so do check it out if you've got any queries about it, or just leave a comment if you want any more help. So to be eligible for the loans that I've mentioned, you need to be a student that is going to be studying in the UK and currently lives in the UK. You can apply for these loans through the government website, and it's important to choose the ones that are right for you. You can also make sure to apply in the right timeline, so do check this out because it can vary from place to place, but it usually opens around the March time before you start uni. So do check this out and stay on top of this, as it will be quite important to do so if you want these loans. To set up an account, you simply go onto the website that I'll put links in the description down below. You put in your national insurance number, and you then might have to answer some verifications about your identity, where you're from, maybe some things about your household income, and it's important to have all of this on hand whilst you're going through and setting up the account. You'll also be asked about the course that you're studying, how long you're planning to study, and what type of course it is, so make sure that you have all of this information available to you while setting up your account. So on top of the 2 loans available for students studying in the UK, there are also a couple of grants that are available and bursaries. These are organised and are given out on very selected basis. So some people will be eligible, but a lot of people won't be for all of the grants or bursaries. It's important to make sure that you're applying for the ones that are suited for you and that you give them enough information so that you do qualify and are entitled to these loans, bursaries or grants. Some of these include disability student allowance, others are for childcare. There are some bursaries that will also be eligible for students from your actual university, so do check out their websites if you think that you may be entitled to some of these. It's important to note that for a grant or a bursary, you will not have to repay this money after you finish university. It is simply available for you to use. So now on to the not so enjoyable part about taking out a loan, and that's that you have to repay it at some point. In the UK, they have a sort of unique way of repaying this loan, and it's not necessarily something that everyone will actually fully repay. The guidelines on how you will repay your loan will constantly be evolving and changing throughout the plan and time that you will have to repay your loan, so it's important being up to date with this information. I can put links down below as to where you can find out more, but it is really vital that you stay on top of this. So common questions that you might be thinking about is, when do you start repaying it? How do you repay it? And how much will it actually be that you're repaying? So the fortunate part about student finance loans is that they don't actually appear as debt on your record. This means that if you want to buy housing or you have to apply for other loans, it won't actually appear on a credit score. This is really important to bear in mind, and it's something that can really make a difference for a lot of people. However, you will still be repaying this loan if you do start working above a certain salary threshold. In each of the countries of the United Kingdom, they will have a different way of repaying the loans, so do double check it. However, in general, once you start earning over a certain amount of money, so for example, if the threshold is £30,000, if you start earning over that amount of money after you graduate university, they will automatically take a percentage of your income away. You won't necessarily have any say in this. In fact, you might not even see this on your records. However, this will be automatically deducted from your salary and given to your student loan company. At the moment, the repayment is 9%, and this basically acts like a tax on your income each month. You won't have any ability to stop this, and there are strict reasons as to why this is the way it is, and you can read more details about this in the description down below. You only start repaying the loan once you graduate, so any money that you're earning in uni will help to repay this loan. However, once you start earning over a certain amount of money after you graduated, you will be charged at 9% on that, and that will just automatically go to cover your loan. Over time, this will chip away at the amount of money that's sitting there for your loan. However, for some people, you may not actually ever earn enough to pay off the full amount of debt that was taken out to cover your university costs. Certain degrees that will be earning slightly more money will pay back this loan in full, so it's definitely not something that you should mess around with. If you don't actually need the money, don't take it out. However, it is worth bearing in mind that the money is available for you to use throughout tuition fees and maintenance loans, so do use it and feel free to use it as it's available to take the cost away from going to university. Just bear in mind it will be paid back over time. Another sneaky but really important part to read about applying for these loans is that there is an interest rate applied to them. This means that every penny and pound that comes out of the student loans company to cover your tuition and maintenance loans will also have an interest rate added to it. This means that as the time goes on, more and more money will be added into the amount that you owe. This means that when you start repaying it, it will seem like a larger amount than when you originally took out the loan. So for example, for your year one in England at £9,250, by the time you start paying this back, it could be a lot higher than that. So do bear that in mind. It is based off inflation and will be made aware to you whilst you're at university and each time that you reapply for a student loan. So do bear this in mind and also keep up to date with any changes to your student loan plans. So now time for a little bit of myth busting. As you can probably tell, I'm not a financial expert, but this is all from questions that I've been either asked or I've thought about myself surrounding student finances and loans. So the first one is, will I be in debt forever? And the answer to that is no. The student loans are taken out and will have to be repaid, but they're taken out and used in installments so that you won't notice it as much on your income. Over a certain amount of time after you finish university, the loans will be entirely wiped as well. Each region is slightly different, but on average it's about 40 years after you've left university, the debts that you owe for the student finance loans will actually be completely wiped if you haven't earned over the threshold to pay them fully back. So another question that I've been asked and thought about is the amount of money that you're taking out worth it? Well, for me personally, I would say that going to university and getting a top education in your chosen field, for me, medicine, is something that is a very unique opportunity to have, and we're very fortunate to have it. And also having the ability to have some support financially so that you can study to the best of your abilities without worrying about having to provide money to cover your student fees is really, really useful in my opinion. I think that it's a really good opportunity to make use of, and yes, you will possibly be paying back money as you earn. However, this is made more achievable by being in little chunks every month to every year. It is completely up to each individual and everyone's circumstances are very different, so it's something that I would highly recommend looking into and reading up about before you commit to anything. If you do have any questions, feel free to leave them in the comment section down below and I'll hopefully be able to advise you a little bit further. But I would recommend going onto the websites of each institution to make sure that you're choosing the loans and possible grants or bursaries that are best suited for you. I think overall, student loans and maintenance loans are really useful. However, if you can budget well and work around university, it'll really help in the long run. So I would consider taking out the loans, but also being able to support yourself in other ways. Please make sure to read up about all of this, and I hope you found some of this information useful. If you did, I'd really appreciate some comments down below or a like as well. Please feel free to share this video with anyone going through this process at the moment, and if you've got any further questions, feel free to leave them in the comment section down below. Thanks so much, and I'll see you in my next video. Bye!